maintain everything within guidelines of those programs that you're being qualified for. Then you have, what is credit and what information is there. Mostly we look at the scores, the credit that you have, if you have derogatory accounts, public records. So if you have a bankruptcy, even though you have a 700 score, that tenure of that bankruptcy is going to determine if we can give you an FHA or a conventional, or we're going to have to go to alternative programs. So there's just more than the score that has to be looked at, and we have to be keen to that because it can break a deal. Now, we have several scales of credit, 780 to 850 being excellent and so forth. So when you're in the red, you're probably going to end up being in a non-traditional program. Do we have FHA programs that can go to 500? Yes, we do, but they're, just like everything else, you cannot go 3.5. Your down payment is going to be higher. And there's rules to, you cannot have any lates in any trade line within 24 months. And usually when a credit is that bad, you're going to have issues, lateness, collections, charge-offs. So, most of the time, my experience had been that even though it's a doable loan, the other guidelines that have to be followed are not met by the client, having to go into, again, a non-traditional loan. So your credit is, why do they vary? You may have 700, a 600, and a 500 and another one, because credit companies report different things at different times. And they have different score credits, and there's different types of, there's Vonage, there's I can't keep up, but there's a whole bunch of them. And, if you have a lot of inquiries that pull your credit score down, and you have to have a combination of installment loans, and revolving lines of credit, mortgages are good. So there's a combination always of things that we look at when analyzing credit. Now, the assets. So we have to check if the assets, because what's good is for me to verify your income and your credit, but you need also money to close. Every program has a down payment, most of them. But even though if you have 100% loan, you're still going to have closing costs. So it's important that before a client gets into contract, that I make sure that they have the assets to close, or at least know where they're going to come from. Are they going to come from a gift? Are they going to come from a down payment assistance? So again, that's me verifying that when that client, I pre-approve you, you can go with confidence out to the road and show that client that, this is a done deal. We just have to get your property. So playing Monopoly, it can be very expensive, right? We don't want to do that. So each program has down payments, right? So FHA standard 3.5. If the score is 580 or above, if it's below that, it's going to be 10%. Conventional, we have programs that can do 3% down instead of 5%. And that will be the Home Ready program, which has to be, it's income guided. So if you make too much money, you will have to go to a 5%. If you're not a first-time home buyer, you will also have to do a 5% down. Then you have your VA and USDA, which are 100% finance. Now, again, I say 100% finance means that the purchase of the property value is going to be paid in full, as long as it appraises, but you still have closing costs. You still have lender fees, titles, recording fees. They're going to be less than others that have a down payment, but you still will have a cost. Let's talk about closing costs, which is, part of the whole spectrum, how they're calculated and what are credits that are allowed. Like I said, lending is just like buying a toaster. They have instructions, right? So every program, that's how you have to think about it. Every program has guidelines, and what makes a LO or a loan officer do their job is knowing those guidelines, so they can help you fit the borrower the faster they can. So the amounts of closing costs can vary, and that can vary title insurance, title company, the credit score that you have. So when a person calls you, well, what my rate is going to be, what are my closing costs? But there's so much that goes into that for me to give you that, and I hate to under deliver, because if I tell you something, then you're going to hold on to that. And when I do the numbers, they don't realize, well, there's a million things that change in between. You don't remember that? So I try to be as diligent so there's no confusion, because I think it's very important, especially when you're dealing with the biggest investment a person is going to do. And there's money involved. I think is the whole structure deserves to be concrete. So there's no misunderstandings. Yes. No, go on, you can go.
So at the closing cost, for instance, I had a buyer, the lender quoted her an estimate of 15,000 to rent to the table, but originally she was supposed to bring 5,000. So how close is that estimate to?
That's why I don't give estimates. And if I do, I will like email you after we have that conversation, because an estimate can be so large. Why? I have counties where the taxes are 4%, and I have others are 2%. So guess what's going to happen to that closing cost? It's going to go skyrocket. So, and it's hard to comprehend once a person has that mind. They just don't see it. They don't want to see it where the mistake came from. So I'd rather not go through that path, because it makes my job way harder.
And then one more question, because you're signing. She was supposed to sign that estimate, but if she didn't understand the difference in why was it originally 5,000 and now 13, she needs to understand it before she signs it, right?
Correct. I mean, some people just sign it, but or they just wait till the end to then pay attention, and they just forget about the conversation between the rest. So there's two things that I make it very important, because, and then you pass by, because I'm the sales face, right? But I have a team of people that are processors, underwriters that do their job, and I have to let them do their job so I can do my job. So there's a certain point that where the file is, after the understanding that the client has, that the file, listen, my process is going to take care of that. And then I just take care of the little things that may happen. If I see something get stuck, then, I get involved. But it's your file, if it starts crappy, it ends up being crappy. So I rather do the hard work up front and then just move on with my life. Don't have to keep coming back to this. So it's just, you learn to manage your time and what works. And to me, because if a person is not serious, number one, they're not going to give you your credit score. So why are you wasting my time? I can't do my job without it. And if I do, I'm gonna shoot myself in the foot, and you're not gonna like me. I've seen it happen all the time. So when you're ready, come to me. Now I have other options. Can I do a soft pull? Yes, I can do the soft pull, but I cannot give you, I can do a pretty good picture, but that only gives me 2 scores. And sometimes I may kill what I said, because it's 3. We go out over the 3, we take the middle. So if something shifts in that 3rd score, what I said doesn't mean nothing. So there's plenty of disclosures that I have to give to be clear, so there's not a misunderstanding. Not because I think you're an idiot or I don't like you, or it's because, my first house that I bought, I was young. And when I got back to sit and review the documents, wow, and that was a friend. I mean, but it's one of those things that you live and learn, And I think everybody deserves like what's going on, what's happening. So let's talk about conventional loans. On conventional, you can buy primary residence investment, and each of those have a different down payment, depending also on the type of property. So if you're buying a single family versus a duplex, your down payments are going to vary. It's going to be like 15-20% required. And there's also seller cost minimums and maximums. So on a conventional, primary residence is 6% if you're putting a 10-15 down payment. If you're only putting less than 3 or 3%, you're going to be at capped at 3. 25% of more is 9%. So the more skin you always have in the game, the more goodies you have.
I have a question on the conventional.
Yes.
Has the scoring changed as far as, or is with everything that's going on? I've been hearing a lot of people saying they're pushing more the conventional loans than the FHA with how our economy is right now. So has the rating changed?
So I'm gonna explain to you my perspective, right? Because everybody says, oh, I want a conventional loan. Well, why? Why do you want a conventional loan? They hear things. So I ask the question because your reasoning may not fit your scenario,
Mhm.
right? So if there's people that I can honestly say, you know what, the best loan for you is a conventional. I don't get that. I don't get to say that often
Mhm.
because most people have a ding in their credit that is not going to allow them for that DU to pass.
Mhm.
So yes, this is the way it works. The primary residence, you're gonna buy primary residence. Which interest rate is gonna be best? Always the FHA.
Mhm.
But that comes with other stuff. Why are you gonna have the mortgage insurance premium that is 1.75? That is gonna be probably gonna increase your closing cost. So that is when you're in the same situation and you have, for example, a 620. Can you do a conventional 620? Yes. It's going to be expensive or hard to find a mortgage insurance carrier to give you a premium on a 5% loan. So if you don't have 20%, I'm not even going to bother to put you in because your payment is going to go sky high and your interest rate is going to be super high. So, and I explained this to people, but it's easier. Like there's so many scenarios. It's easier for me to explain it to you with your situation of the why. Because it can go either way. There's not a good or a bad loan. My good loan is the one that I can get you for you to be a homeowner. That's the good loan for you. Now, if I put you on a non-traditional loan, I am going to tell you, listen, this is not the best loan ever. So we're gonna get you in the loan, but think in 2 years, we need to start getting ready financially. I'm gonna show you how. I'm gonna tell you what to do. If you don't do it, that's your problem. But I at least give them guidance. If you're self-employed, go to a tax and tell people, stop not reporting your income. There's ways you can save. But if you go to a tax preparer, it's not going to be the same as a CPA that knows all the rules and guidelines. So it's just opening their eyes to certain things that they may not be keen for. They may just know the person in the corner and that's who does their taxes. Who knows? So it's just, as long as I do my work and put whoever takes the advice is going to end up winning. So there's no good or bad loan. There's an expensive loan. There's an expensive way to do things. And there's a, less expensive way to do things. That's the way I see it. So let's talk about assets. Some people think that assets on a loan are just those in bank statements, and that's not true. Assets are including, your savings and your checking. You can go into your IRA, into your 401k. It can be a gift. It can be a loan, but when it's a loan, we have to count that. You have to disclose it and you have to count that payment and make sure you qualify with that debt. It can be a gift of equity. So there's many ways. And if like people say, I don't have any money, so I'm not going to buy. And I go like, if you don't find out how much you need to buy a house, you're never going to do it. Because people don't want to fail. They just they fail to plan. So I say to people, well, why am I going to get pre-approved if I'm planning to buy in 6 months? Because in reality, you don't know what your current situation is. You don't know all the rules of the game. So sit with a professional and see what's ready. And if you can get your situation better. So when you are ready, then you're ready. But most people try to do it the other way around. So again, there's many, we have down payment assistance available. And again, this is my personal opinion. Yes, programs are there left and right. But what happened is their guidelines are stricter than the lending guidelines. So what it ends up doing is reducing the loan approval. So if the client on an FHA is approved for $200,000, when I put the down payment assistance now to cover supposedly their costs they don't have, now they're probably going to only approve for $180. Because without using down payment assistance, FHA allows me to do 56.9%. Once I use down payment assistance, 52%. So the only thing, unless they pay debt, the only thing to make it work down is the price. So those are the things that, again, do we have it? Absolutely. But not everybody fits into it. And you have to be in a certain income bracket also. So that's, there's guidelines, like I said, just like anything else. The assets that are not allowed is cash. So in my community of Spanish people, most of us, and island people and foreigners, they put their money on the mattress. Dominican Republic. That does not work, people. Okay. Unless you're gonna buy cash and you have the whole whatever, it's not, and even so, it gotta be put in the bank. So let's talk about down payment assistance. There's thousands of them. There's federal, state, county, and there's other like nonprofits, organizations. The highest that I've seen are the ones that the counties offer, but you have to buy in the county you buy. And there's first come, first serve. There's a pool, there's, you know, a lot of things that you have to go through, but they're out there. I've seen them give even $100,000. Personally, I can show you so many other ways than skin the cat, than go through the work, put you, me, and everybody else through the work, because it is a process. If you know, if I can close the loan in 30 days, it's not gonna happen if you have down payment. It's gonna be a 45-day process. Okay. So here, these are numbers for Florida, but the highest that I've seen it here, state-wise, is the HERO one, and it's only for people in specific professions, and they'll give up to 25,000. And you do have to have a minimum score of 640. But see, you see here, they have limits, income limits, purchase price limits. You know, they have down, as far as the down payment and the money they gave you limits. So there's a whole bunch of limits that they have, and they're stricter than those of the lending.
I have a question on that.
Yes.
This. So like here in Texas, I have a client right now that's asking about the programs for a certain inner city.
Mhm.
Their income is high. I have not been able to find, a program out there. So is it better for me?
When
to
you
speak
say
to a
inner
title
city,
company?
when
He's
like
trying to go,
rural,
no, I think it was like 77015. So they're trying, his income, his median income is above what the median income is. And I knew it used to be, I know it used to be programs out there, but I just can't find any program right now because like you said, a lot of the programs like that.
yeah, all of them.
Yeah.
Yeah, the state's gonna give you something, they're gonna be sure, because they're made for a bracket of people.
Mhm,
So unless you can claim broke, you can't.
mhm, mhm.
And it's usually, I believe I think one person, because some have like total household and
Mhm.
some working people in the
Mhm.
household. So like HFA is household per household, whoever works. And I think that one is like 90, 100,000.
What was it? I think it was like NACA or something like that. They used to
Oh
have
no,
a program.
NACA
Right.
something else.
Yeah, they used to have like a program, because I know that's kind of what they were talking about, but I just don't know if that program is out there anymore, but it was a program that they had. If you made, let's say you made 200, let's say the median income was 200,000 and you made 6,
Mhm.
you know, or whatever, they'll put you in a certain area that the median income may be 100,000 or something, and because they said they were trying to diverse the neighborhoods or something like that. I know that's what they're looking for, but I just don't know how to find that. So is that something that I would?
I have personally never heard of it, but I can work on doing the research. But think about this, and let's use common sense here, right? So there's a shortage of what? Of affordable houses, right? There's a certain bracket here that people are having difficulties. So when interest rate go high, that number even increases more, because now less people are going to be able to qualify. Now it goes to the medium,
Mhm.
right? So what happens is when interest rate go high, they start putting all these crazy loans out there to fit that, but that's still going to be costly because that's what the interest rates are. They just may give you, no income. I have one right now. It's no income verification for primary residence.
Mhm.
As part of, you have to put 20% down. But back in the days, it was 80-20. You can buy 100% as long as you breathe.
Mhm.
And that's why what happened. But now we're being a little bit more conservative in certain things and, evaluating the risk. So, I've like I said, I've never heard of it. Like, I know the counties will give like even up to, like I said, $100,000, and those don't have, it's just, you have to be able to qualify.
Mhm.
Those don't have income limitations.
You were talking a slide ago, you were talking about mattress money.
Yeah.
And
You want me to show you how to do it now?
No, so with mattress money, one of the things, can't you do with the title company, can't you deposit into that trust account to develop your down payment?
Yes, but it has to be 6 months seasoned. They're still gonna ask you where the money came from.
Oh,
Even though the money's in the title, first of all, the title company is not going to accept cash. Right, you're still gonna have to deposit it and wire them the money. Most of them are not even doing cashier's
what
check.
about an attorney? Because I think.
What about it?
Won't the attorneys accept that into?
There's
their
a
trust
law of
account?
money laundering, unless that attorney can somewhere money launder that cash. And you know what I'm saying?
And it's funny that you said it, because I've actually had it happen before. And she was an attorney who owned a title company, and she allowed my client to deposit money into their account, their trust account, seasoned and down somehow. I don't know. The
Right, that's what I'm
legalities of
saying.
that.
They will have to season the money. You understand? Now, the lender, depending on what type of loan it is, if you're doing a traditional loan, I promise you, they're gonna ask you, I don't care if it's there for a year. They're gonna ask you where the money came from. You have it seasoned there, why? Well, did you do a transaction that counts? Do you understand what I'm saying? If that attorney doesn't budge for her, it's not gonna happen. Now, there's other loans that as long as the money's there 60 days, they don't care.
Right. And you could just put that in a regular account and let it be seasoned.
Quick question. Are you gonna talk about the container rooms as well?
We are, I'm gonna show you a little some.
Just make sure.
So our specialty programs, we can do 100% FHA, and that's not one loan, that's 2 loans. And that can be either subsidized by, like I said, equity line of credit or down payment assistance. Conventional is the same. Those loans have, there's not a one loan, it's always gonna be broken into 2. You know, usually back in the days, we used to do 80/20s, and that was for the purpose of not, removing that mortgage insurance from the loan. Instead of doing a 95, and anything over 80%, you have to buy that mortgage insurance. So we were separated into 2, at least they wouldn't have that additional payment. So we can do non-primes. When you say non-primes or non-traditional products like bank statement only, 1 day out of bankruptcy, using debt service ratios, stuff of that sort, the crazy stuff.
What if they have like their tax statement, but they don't have the bank statements to go with their tax statement?
Tax statement.
Like
You mean
they
tax
file their
returns?
Tax return, like they filed their tax return, for the year, they did their 100,000 on their tax return, but they don't have the bank statements.
You don't need to.
Okay. So they can file
You need,
for-
the only reason why you need bank statement is to prove you have assets in the bank to be able to close a transaction. Yes.
How different is the requirements from leasing to purchase?
What are the requirements from leasing to purchasing?
How different are they? Or strict?
So when you are, say, for example, when you're transitioning a client from a
Yeah.
lease, that's what you're asking? From a
they're in
lease
an
to a purchase?
apartment- Yeah, they're in an apartment and they want to lease a home. Or rent a home.
So you just find them a new home for them to rent, or are they gonna buy? I don't quite understand your
No,
question.
they're just looking to lease or rent. But like, do they have to go through all this?
No. Usually, at least, I'm not a realtor in Florida, I mean, here yet, but I know in Florida, we just have to do a background check. We take an application, a background check. We make sure when I see pesos, make sure that they can afford the place. But that's it. They don't need to be pre-qualified. You as a realtor, you look at all that information and you say, okay, I think this is a good candidate. And then you just, go ahead and you start looking for them.
Qualifications of the individual. place
Right.
that they're trying to lease, because sometimes
Like-
they have restrictions.
Right, like most people, if you come to rent to me, I want to see who you are, what's your history, right?
Right.
Most people will ask, as a landlord, they will ask for, background check. I don't want to see that you're a criminal or a sex offender, stuff like that. So it's like standard things that you can pick up from the client before you even take them looking.
Yeah, and that's a totally different. process.
Yeah, that's a process.
And so Evans is one of our brand new real estate agents.
That's fine. That's fine.
And so, yeah, thank you for that.
Any other questions? Okay, so we do bank statement programs. And that, what it means is we take either 12 months or 24 months. We add all the deposits that each bank statement has, minus transfers and certain other things. So there's guidelines again to everything. And then we divide that into the 12, 24 months. And that's how we come up with the income. Foreign nationals are people that have no documentation in the United States. They have no residency, is that you say it?
Mhm.
Okay. ITN is they have a work permit.
Work with ITN.
So ITN is that they have a number that the United States have given them so they can do business and work. When you have those and you have a work permit, we can actually do an FHA. ITINs are because they don't have a work permit yet. So that means that they have no residency, but they do have a credit score and they have, they can have a bank account. So they, and what the difference is they just require different stuff, like 10%, 20% down. In these cases, they usually self-employed people, or if they don't have, they come from out of country, that's where foreign nationals come into place. And then for whatever country they're coming from, all the documents have to be translated. And those loans usually take like 60 days just because of that.
Now, are people able to purchase with this program under their business with their EIN?
Yes, they can, but it's not going to be a primary residence.
Mhm.
So if you don't have a status in the United States, that has to be a second home or an investment. It can never be a primary. Okay. Now there's some, like if you have a work permit, it's very common with farmers. Like they come to the state, they come under a work visa. And I can actually do those FHA as long as that visa has been able to be renewed. So most people are not able to do the FHA, I can. Debt service coverage ratio loans are very common for investors. And what that means is no income, you have to be self-employed. You have to own your own home. If you don't, I can get an exception, but that means rates are going to be higher. And you have to have several investments. What that means is that loan the single family that you refinance is an investment. And as long as the rental covers that mortgage, I don't have to show income. So if you're refinancing an investment property, I can just do that loan, no income, no asset, you can cash out.
So you have to have more than, you have to have a primary residence?
You have to have a primary, yeah. If you're, for example, doing, a person does not own their primary residence and they have an investment property. As long as they're not homesteading that property, and I can show in paper by means of driver's license, everything matches that they're not living in that property, then I can get an exception, due to the fact that I can show them they have it in the taxes collecting rent. So there's a lot of ways that we can find out.
So on that DSCR, when you do that, because normally you would need like 2 years of.
Tax returns, right?
So you don't need that?
And so, that's what I was asking,
No.
so much about that, yeah, because you have a lot of people here in Texas that have their own business and they like to separate their business and personal. And then now you have this, the EIN, they're using their business credit
Mhm.
because their business credit sometimes is stronger than their personal credit to purchase homes. And I mean, I heard about it, but I just didn't know companies out there. And I'm trying to introduce myself to different title companies too, so I can learn.
Well, let me back up, but just to make sure the EIN number is the identification number that is given by a bank institution. No, I'm sorry, by the state. No, it's the IRS, I guess. It's the IRS to identify that business. Now, that EIN number, if you use it, is what actually you can get credit for that. But there's a fallacy about business credit, right? Business credit, when you do like real estate, when you do a car, you can title it under the business, but you always have to be a personal guarantor. You understand? There's no such thing as you giving me your IEN number. That the ITIN number is a number that the DCF, is it DCF? Department of
It's a temporary identification number, so.
Correct, where people come here on a working visa,
Mhm.
and then they give them that number so they can actually, it's like a credit.
Cause I believe somebody in an apartment with that, but not with an EIN, so, I mean, see what I'm saying?
Right,
I was like,
I-10 and
I
EIN are two different numbers, are two
Mhm.
different things. One is for the corporation, one is for the individual.
Mhm.
Okay, I just like to clarify, I'm not like know-it-all, but sometimes, when you're talking and sometimes talk to my husband, perfect example, and he's meaning in his mind something else, and in my mind is something else. And then when mistakes happen, we're like, that's not what I said. Yes, you did, So I think communication, especially in our business, is so important. And investor no ratios. So it's no ratios is basically the property is vacant and there's no rent, so I can verify that is going to be rented or there's going to be income. So these are like an upgrade of private money lending. It's institutional lending.
I'm sorry, is this more like hard money?
No.
No. Okay.
So hard money is private money. Right? You can be a big or small institution that a group of people use their personal funds to lend, or they have a line of credit and they balance the interest rate. For a lender, you have to do a certain amount of loans a year. So these are, and then you have to have guidelines and all that stuff. So DSR is just a way that a lender came up with a program. And these are very common, but in the commercial side. They just now they're like business loans. So they're not closed in a CD, they're closed in a HUD.
Okay.
So it's same guidelines, they're just for investment properties. You can buy or refinance, but you cannot use it as a primary. Okay, any other questions? Yes, no. So FHA, I hate doing this. I'm gonna have to remove this from this, but there's 100% financing on FHA available if you do a first of the 6.35 and a piggyback, which is a second loan, or you can do a HELOC of 3.5. In this case, like before we used to do the 80/20s, but that's when mortgage insurance at 80% was removed from FHA. Now you have it for the life of the loan, so it makes no sense. Income limits, this actually has changed, it's 56.9. And we can always close in 30 days or less. If the client is an organized person and that person gives me at time of the application everything that I need, I can close a loan in 15. But we have to be so diligent on it. And I tell people, you want to close before your date, this is what you got to do. It's like I call, you got to jump, because your day becomes 3 of mine. Because I have so many third parties to go out to and information to wait. And people sometimes don't understand that. 101 conventional is again 90.
I'm sorry.
50%.
It's 50.
50%. 56.9.
So you do 100% with the 3.5% piggyback, second mortgage on that FHA loan. Which is no down payment, and the PMI is still going to be the same.
You're still gonna have PMI on the 96.5% of the loan.
But not the 3.
Correct. Correct. So you can only charge PMI on one loan. And there's some programs that, for example, if I go conventional with another lender, or you have options to buy the MI, but it's not worth it.
Right.
You know what I'm saying?
Is there any more criteria with that 100% piece? Other than that, I mean, that's a very favorable loan. That's extremely
Believe it
seldom.
or not everybody fits the mark. Because what happens is okay, 640 minimum credit score. But I guess what? For a piggyback, I'm gonna get 7.
Oh, you need 7 for
So
piggyback.
exactly. So these are things, I mean, as a lender, I'm telling you, and I can use this to advertise. Now you're gonna call me, but I don't want to do that because it's gonna be a waste of time for me and you. So I want to be realistic, right? So yes, absolutely. And if now they're going down in credit score, but with the 640, the piggyback is only gonna want to do what's called a CLTV, and they're not gonna go 100%, not with that score. You understand? So it's like, it's hard because one will give it to you, but the rules of the other one, and that's the problem when you having two separate lenders. In your mind, you can do it, but when you combine them both, yeah, one will give you one, the other one won't accept it. So that's what happens in those
And is
cases.
that one 56 as well, DTI? Or would that be on that, the one with the piggyback, would that be at 56.9 as well, or 50%?
No, that's 50%. Yeah. You have what's called in the lending, the LTV, which is a loan to value, and then you have the CLTV, which is what others may give you in addition to, right? So on the CLTV, your DTIs are, now if you do one loan, then I can go to 56.9. Okay. Because what happens is, and even though if I do a first and, if I do, yeah, then there goes. If I do a first and second, right? That the LTV on the first can be 56 between the two, or the second one not. You know what I'm saying? So it's like, man,
I guess my next question would be, before you jump to conventional, would be 203K.
yes,
If you could do, you do 203K as well.
yes. It's an FHA program. It's only for primary residents, and you can do little or heavy as long as the foundation is on the floor. It's not for new build. You have to have some type of structure in the property, right? Okay. They're a pain in the butt, and my experience with those, I was gonna tell you my peace of mind. It's hard for you to get a primary person that has bought their house for the first time. Not only for a scary process, but now you're gonna have to go into rehab that they don't know nothing about unless you're gonna be there holding their hand. Can we do that? Yes, but depends on how your time is. Then we have the 100% conventional, which is again 97. In order, now I can go the guidelines to this, 97% requires you to be in a certain income limit. All right, so not everybody qualifies for this. Then I can get you the 4% piggyback, they do allow that. No mortgage insurance will only apply if I do the 80, I can do an 80-15 or an 80-20. So that I can be able to remove that in mind. Interest only on the payment on the second, that is correct. You can, if you qualify, you can do the HELOC or you can do the 30-year fixed second. You're always gonna be capped when doing 100%, 50%. There's income limits because of the 97%, but if I split it 80-20, there's none. So that's the way of getting around that. And closing 30 or less. Specialty lending general requirements. So minimum loan size, 100,000 is actually less. Is it feasible to do a $50,000 loan only? I don't know. It's hard because it's so much work and you're probably not going to make nothing on the loan. It's more expensive than anything else for us to do a loan. So we try to remain it 100 and above. Now there are lenders that will not lend. So FHA conventional, they will go down to 50,000. Once you go into the non-traditional, like 12 months bank statements, most lenders are capped at 100,000. DSCRs, most of them are capped at 75. So if your loan amount is not 75 or higher, you can't do it. 1 to 4 properties, that's standard. So residential is going to be 1 to 4. And remember, the more units you have in a property, your down payment is going to be, you're going to have higher requirements and you're going to have higher reserve requirements as well. We can do non-warrantable condos. Now, I don't think this is very common here, but in Florida, every condo has to be approved, the borrower and the condo has to meet the Fannie Mae guidelines or FHA guidelines now that we can do spot checks. If they don't, in Florida, we call them non-warrantables, which I'm thinking is the same thing here. So that means the condo cannot be approved. They don't qualify for FHA conventional, which now I have to take them into other types of lending that accept non-warrantable condos. So they don't look at those things. And what makes it warrantable, they have to have at least 50% of the association has to be, the owners have to reside. No lawsuits. They have to have reserves and a budget with reserves in it, of course. What else? That's plainly it. And the easier way to say it is if you see they don't have a budget, it probably doesn't have any of the above or something's wrong with it. but we can do actually spot checks. It was very hard to do FHA condos because you have to be, the association has to be approved. Now we're actually doing spot checks. So to try to get that back in. These are the out of the box programs. We can do bank statements down to 850 score. That will be 12 or 24 banks make statements. You have to be self-employed. It can be personal. So there's some people that have businesses that don't have business bank statements. They just use their personal, we can use those. 100% of the personal bank statement deposits will be taken in consideration. 50% of the percentage owned by the business on the business bank statements. So if me and you own a property 50-50, I give them the bank statements, we have $100,000, gonna be $50,000, what they're gonna take in consideration. If we own 90%, it's 90% of the 100,000. Foreign nationals, so foreign nationals, there's no credit scores needed, 25 to 30% down. We have some lenders now that sometimes do 80. We no longer do the international report. If you want to go do an SBA, maybe, but I wouldn't recommend it. So we don't need it. We don't need it. We just pull the credit and make sure that they don't have any credit in the US. They can only buy as an investment or second home. DTIs are now higher. I can actually do 55. And countries that we usually have problems with, we don't do business, which in this case is, well, Colombia is back. Venezuela have a lender that will do it, and we don't do Russia.
What about the green card? Don't they have to have a certain amount of time on the permanent residence left? Okay.
No, so in the part of the application, there's a part that says, are you a resident alien? Are you a US citizen or
Oh, the
no?
work visa, I'm sorry, the work visa. So that's green card.
No. So the work visa, they just have a stamp in their social security card that says permit to work.
Okay.
And then they have to like file some stuff every year.
So, okay, so I thought they had to have a certain amount of time left on the work visa.
They cannot be expired. And if it expires, they automatically renew 6 months. So as long as we do it before the expiration, we're fine. It cannot be expired. Any other questions? Okay, so on the ITN, back to this, I have, it's called third-party financing. So if I had a foreign national client, I'd rather offer them that because it's only 20% down, no questions asked. They don't have to give no documentation whatsoever. They just have an interview with a third party. They take a class, 20% down, and they have a mortgage. It's less stressful than this, and interest rates are not any better than that. And that's for anybody. Like I can do a loan as long as you can breathe and have 20% down and a good attitude. I can give you a loan.
And what's the interest rate on that?
It depends. So I've seen them as high as 10, 15%. But what happens is, as an investor, they first approve you to see how much you can, they have to make sure that at least you can make the payment. They're not going to check statements or anything, but there's a series of questions that they will ask. And then once they say, yes, you're approved for this, we feel comfortable with this, they'll go and you shop for the house. They'll buy it for you, and then they'll do a mortgage deed.
Is that a local company or
They're local, yes.
TL Global?
Yeah.
Okay.
Oh, you know them good. Yeah. So, like I said, I will recommend it versus this because it's less documentation. Then you have your ITN DACA, which is usually 10% down, 620 minimum score. Again, they can do primary, second home or investment. DTIs now, we have banks that can do 50%, and we can do actually 20% down with bank statements for DACA. Debt service ratio is the one that I told you about. That is for investors. So minimum score we can go down is 620 minimum. It's a 20% down for a purchase, no matter what. If it's a first-time investor, 65%, that's not true. Banks have taken that off. Investment-only property, that's correct. That's the only way you can buy on a DSCR loan. And the DTI is going to be 100% of the income. So the DTI is made by income, assets, and debt. So since there is none, because we're not gonna disclose the income, some lenders even don't require for you to put the employment. But they'll require, what happens is the appraisals are usually more expensive on those because they'll do an additional form, which is a rent schedule. Not only do they wanna see your lease, but they also wanna see what's around the property renting for. And if one doesn't match the other or are very far apart, we're probably gonna take the one in the appraisal. Because it's the market value. So when the rent is not covered, at least for $1 higher than the mortgage, that you have to go down to a no ratio loan. Okay. Okay.
I have a question.
Yes.
And I don't know if I missed it, so I was a few minutes late. What about USDA loans?
We do use it. So those are part of the 100% financing also.
Mm-hmm.
But the requirement is, apart from the borrower, the land has to be approved for USDA. Because I'm gonna do a USDA in Midtown or here, because the land is not-
I live in Town Lake, and so Bridgeton is the other side, because Town Lake is like oversaturated, didn't have hardly anything to that right now. But Bridgeton, they did have a few houses I was looking at that was USDA
Mhm.
qualified, because I went out there and I talked to somebody, and basically they were saying that they were building and getting finished faster than they can get the lights and that kind of stuff up. So as long as we can get somebody in there that qualifies on the USDA, what are the qualifications?
So you have to have a 640 minimum. The DTIs, I haven't done one in a while. It's 3842.
For the,
Front, so you have a front and back ratio. Your back ratio cannot be more than 42. Your front ratio cannot be more than 32, 37. They don't have mortgage insurance. Their rates are usually less expensive. And there's a USDA fund, but it's very minimum. I mean, great loans. But again, yes.
Are they taking a long time to process those at this point? Okay. I know sometimes they're inundated and sometimes they're not.
What usually in my experience, what makes there's two things that delay the appraisal. I mean, the loan, the appraisal and the inability for the client to be responsive. Other than that, a file should run or somebody made a mistake.
Yeah, there was a time when USDA was just so backed up.
Yeah, and VA loans, like for example, we have to use VA appraisals.
Right.
So we have to use another portal that is used. They'll tell you, order the appraisal, do not bother me for 10 days. And if you do, they'll give you a fine. They're just like that. So yeah, I can believe that. Because it will be the same for USDA. There's a different program that everything is underwritten through. So I definitely believe that.
I don't know if you saw the question in the chat.
I did not. What was it? Where's the question?
All right, Laura.
I'm blind, I don't see it.
I can read it. This is Laura. I just have a client who I've sold a home to in the past. He's an ITIN buyer. He
Mhm.
does have a business and he's actually wanting to buy through his business. Is that possible for an ITIN?
He still, like I said, he still has to be the personal guarantor, but he can title the property under the business. Yes, he can.
Thank you.
You're welcome.
how do you do that? If you don't, because you don't have a social security, so how do you be?
Your ITIN is
Was
your,
specific, okay.
right, you have, remember, you have a type of status
Right.
with an ITIN, which is that number.
Mhm.
Attached to that comes a visa. So I'm gonna have to also see what type of visa do you have to confirm that information. So then that in that ITN, if they have a long time here, they can use that and build credit. I have people see
Right.
600, 500. So that's why even though if I'm doing it for a national, I will still pull the credit, even on their name and their date of birth, just to make sure that that's the truth. So same thing happens here. So it's the same concept, it's just the rules are different. I still need that ITIN, and now, I have to let them know that that's what it is. It's ITIN, it's not credit. And they will be able to know by the there's so many ways. So that's why I sit down with people and I tell them, listen, I'm your best friend for the next 30, 45 days. Like any dirt you got on you, please tell me. I've heard it all. Because once from this office, I can do damage control. Once it's out there and they find it and we don't disclose it, then there's gonna be a problem. Either they're gonna deny you or we're gonna have hiccups in the loan. So, you just have to be honest. Try to, please. Non-prime can go, again, those are loans that are really, really crazy, like one day out of bankruptcy, foreclosures. They don't have no seasoning for these items. Most loans do. Short sale, you can be 24 bankruptcy, foreclosure, short sales, 90%, no trade lines, collections, okay, no credit. So it's like pretty much you're breathing and gonna give you a loan. It's more towards they have guidelines, but they will ask you questions. They wanna, know your assets. They still will do the information. Private lenders will probably lend you the same amount of money, but they don't ask you nothing. They're just concerned that property has equity. That's all they
What
look
kind of
at.
interest rate does that look like?
Right now, probably probably in the tens.
Oh,
But not only the 10% is a higher down payment. You're looking right now like 65, probably 60%.
down?
Yeah.
That's a lot.
It is. The minute the interest is starting going down, up. So I had a hard money lender that was doing 70%. That's not bad at all. 70% of 7%. I was killing it. Once interest rates went high, I go, oh no, we're gonna have to balance our risk. No, we're not doing more than 50%. So this market can change, and that's why it's good to have somebody by your side. Are you guys gonna keep up? You should in some way, but there's things that we go deeper in. Programs change all the time. FHA changes stuff.
So now with this non-prime, is that something that you guys do in-house or is it
No.
with third party?
It's brokered.
Broker.
It's brokered. So I'm the point of contact. And what I do is we may have relationships with 5 brokers. But I will have to call the 5 brokers and say, okay, this is the situation. And from there, I give you, because one may ask for 12 months reserve, the only one does 6. So I have to call all of them to see what's the best spectrum. And don't go by what the website says, because they change. They change all the time. So you have to call and make sure that your client fits so you don't have hiccups.
Now with a loan like that, with a lot down, that's a lot. But how long would they get themselves together, they're a year out of their bankruptcy, so now they can qualify for their loan. How soon would they be able to refinance?
6 months.
6 months too?
After there's 6 made.
So there's no minimum.
And DSCR loans, they do have a prepayment penalty. Most of them do. You can buy it out, but that means your score is gonna go higher. Most commercial deals, which this is what it is, but are only on single families or in duplexes. But they will have a prepayment penalty, right?
And that was under the DCSR?
DSCR, yes. Now, one of the things as a lender that I do, like I'm into, yes, I do know my stuff, can't deny it, I am very creative, but I like helping people grow their business. And I do that through relationships, supporting them in what they do. So, my mortgage has a whole bunch of goodies. If you guys have listing and, you guys want to expose it, I have also a radio show every Saturday. I bring people in my radio show to give you guys exposures. I can, do showings of those listings in the show. We have about 300 realtors that we deal with, and, realtors sometimes are weird. Here I've seen it less, but imagine if you just do, if you put this out there to 300, most of the time somebody will have already a client. And, like I said, that's one of the reasons I'm going to take my license, because in Florida, it was so easy for me to see things in a system. Here, like, I don't see that. So maybe that's another thing that I need to fix.
I talked to a lot of people that have their license in different places. They came here and they're like, oh, a beast here.
Well, it's not only that it-
So everything's difficult. Oh my God.
And you guys have like SBAs, we're doing business as businesses. I was like, I said to my God, this was so Rachel, this must be a Spanish thing, these freaking people, why they do DBA? But actually, that's a corporate, I didn't know that. So I think in order for me to complement and be a better assistance, because I know my stuff in Florida, like, you know, but I really, there's things, it's the same, but there's some things that are, you know, and I don't like waiting for nobody.
How long have you been here?
2 months.
Okay.
Really?
So you
She hit the ground running, baby. I like it.
Let me ask you a question. You were, you're talking about relationships and you build a business and help other people in the business. Do you give leads?
I do.
Are you marketing independently, like for your own leads that come without agents?
I haven't started here. But I'll say, because I have to pace myself. So it's already third quarter. So I'm gonna say for January, I'm gonna heavily do campaigns for that.
Where are you showing up in Florida on Google searches?
Google me up. Look, you just put my name, Jennifer, and pow, 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 whatever it is.
So what areas, because you've been here just 2 months, so what areas are you familiar?
I
with?
don't limit myself. I can do the whole state of Florida.
No, I'm saying here in Texas,
Mhm.
like, because I know like some neighborhoods, if you're not familiar with like the HOAs and different things with their.
Information.
It's okay.
It's
So you
public-
just
public
look up-
record,
just
yeah.
look up.
So I can do my job from sitting from my desk.
Okay.
I can buy a house sitting from my desk. So it's, you know, it depends on your experience of and how you see things. People sometimes get attached to me. This is just like a bread that I'm buying, you know? But some people don't see it like that. Oh my God, it's a lot. But that's always all about, that will go away with experience. You know, I've been here, I've been doing this for 15 on the lending, about 5 in the real estate. And now, okay, now I want to move forward to other things like the teaching, or the building, you know, because especially here in Texas, there is so much opportunity, man. Like I come really from a place where if you see a lot, people are like, you know, let's do it, it's mine. Or if you have to go because Florida, South Florida is already saturated, you know, there's little places to build. So everybody has to move out and everybody wants to be there. So here is like everywhere where you go, you see is land, and it's still cheap. The house that we
Comparison to somewhere else, because so this market, and that's what I was telling a lot of my clients, is like, we've never had like some of the other places where the housing market no, we've never had that, because like with all this stuff in this last year, we've had a lot of people from California, places like that, so their houses there, you know, they can buy 2 houses here.
I'm telling you, the
know,
one that I'm
exactly.
building here will cost me double in Florida, just
Right.
because of the land,
Exactly.
just
So
because of
like,
the land.
yeah, bad for people here, but good for other people.
Yeah, but I mean, most of the companies and big plants have moved here. I mean, in everywhere you see, I'm telling you here, where I've never seen, like when I was like $200,000 homes, brand new over there, unheard of. So to me, it's like, you know what, this is one of the places where if you don't want to be a homeowner, it's because you don't want to, honestly. You just don't want to. Because I think anybody that makes, what, $40,000 can at least for $150,000. Can you find that here? Yes, you can. Yes, you can. So,
you're saying as far as when you show up on Google searches?
oh, so this is my, wow. So this is Zillow. This is my reviews. I got 5. And then if you go to, well, let me put it here.
Okay, so you market with Zillow.
I'm not doing Zillow right now because I really had a bad experience. Their leads were crappy. And I'm very conscious about how I waste my money. I'd rather be in the massage parlor, do my nails, than giving it to Zillow. Jennifer Nina.
you partner with real estate agents on Zillow?
Yeah, you do. I do. Yeah, branch manager. So LinkedIn, Facebook. Oh, I'm not signing in.
So if you type in your name, yeah, you're gonna come directly up. So I guess my question is, on Google search for loans in Houston, I don't know, loans in 77532, whatever, where would you show up in a Google search for a Houston home?
I got what you're saying. Okay, so I'm in the process. By October 1st, I'm opening the branch here, because my branch right now is in Texas. So the
It's
way,
in Florida.
sorry, in Florida.
Okay.
So I'm licensed personally licensed here and in Florida. I mean, yeah, here in Florida. I was like, where am I? The company's licensed in other states.
Okay.
Now, because I'm here residing now, I want to open a brick and mortar. So
Right.
we're in the process right now. I'm going to open it in the building. Hold on, the Texas Real Estate. It's a big building that says Texas Real Estate. Never heard of it? It's off 249.
249?
Yeah,
Okay.
it's like, it's only real estate people there. So we just signed the lease this morning and it's gonna be open October 1st.
So
So
you're in the Willowbrook, Champion, Willowbrook area? I know
She only been- she
249.
only been 2 months.
Yeah, no, I have
my husband doesn't think, I'm like, really? I know Cypress, I know Tomball, but don't start talking to me. I'm like, huh?
We got no.
Let me give you the address, hold on. So right now, I have an office in Workwell, which is virtual, so I meet clients there. Right now, I'm working from my living.
So as far as your Google search, you said in 2 months you're gonna have
An office in, right, so I
So-
can advertise in Texas. So if you see all my social media, it's gonna say license in Florida and in Texas with my Florida license.
So are you generating leads from your online?
Tell me what you wanna do for me.
No, I want you to do something.
Yeah.
So.
I want to get some
Just
lines.
talk, just tell me what you want.
So I want to receive leads from you
Uh-huh.
that already pre-qualified. And I will begin to pitch that to you. I mean, it's not
And yeah,
my
because
place.
I think we're still on screen, and so I don't know if we have a time frame. I'm not sure, I'm not the time.
I honestly, I have to leave here at 1:45 because I have to go pick up my children. Other than that, I will stay here the whole afternoon. I came ready.
And so,
That's one question.
yeah, and so I just wanna make sure that people, cause we're here, this is one of the reasons I love coming in, because you can always ask questions.
Right.
But I'm not sure about online, of course, what they're asking.
And I don't know how to work the thinking of
It's
the,
that key.
The
red one?
Chat.
Mhm.
here?
Yeah.
Here.
That is, yeah.
Ah,
So if you go up to your top
I
right,
hear everything. I
And
listen
what's that?
to
It's
it.
coming in, reading it.
Right.
if you go up to your top right and change your view,
Top right.
where it says view,
Actually,
Wow.
the screen just
Yeah,
changed.
yeah, there you go.
Wow.
There you go.
Take control.
There we go. So what we trying to do now? Sharing the screen share?
No,
No,
just hit
chat.
view. If you go to the top right corner. On there, it should say view,
Is it on here?
or the green, like next to the top. in the middle.
Share.
You see that in the middle, view
Well,
options?
Let me see.
In
There's
the
no view
middle,
option.
next to the green.
In the middle next to the green. No, I don't see view options.
It's on the screen. Straight.
Oh, view, that view? No, we don't see that.
We don't see it on here.
You don't see it on?
It's funny.
Oh, that's interesting.
Thinking as if we're crazy.
No, same.
I didn't mean to hold out. I said, "Did you think?"
Okay, yeah. What's it say? You share your screen, you share, chat, more, disabled, hide video. I wanna hide. Shit, sound.
Can't forget the ball. You know, set yourself apart. KW, that's probably.
Maybe so.
Yes,
Is that where it
yes, I'm pretty sure.
Okay.
Probably at a bowl class possibly, or maybe maybe not even bowl, but probably just in the office.
Maybe it's in the
What's the guy's name who's on the team? Is it Kenneth or
Diego.
Diego. Diego.
Just a little
Okay, yeah.
Yeah. No, I'm here. Yeah.
Hey, that's
Where
what
is
you
it?
I'm gonna tell my husband, I have to get over this lunch.
Okay.
See, it's this right here in the middle,
I'm telling you, I just didn't-
right? Like
I just
here,
had to tell him,
I
said,
just
"Man,
clicked
you
and I
ain't
said
helping
show
what?"
previews, right? And here's all the chats. This is the chat where you could jump in there and ask.
I'm
But
at All City Real Estate.
like, there should be a view.
Okay,
option.
before I leave, I want to quickly show you through a project that it should start. Let's see, November, December. It's about 1,000 homes.
Your primary lender?
Oh.
Your primary lender?
Yes. It's, oh my God, container homes.
Oh, okay.
It's affordable housing.
And you guys are gonna be for the finance?
Huh?
Okay.
You can do it for Che convention.
You know, you in Texas, you got a lot of people on those container homes.
Absolutely.
So let me look
Yeah, it's a market that we haven't
Land
really
and
tapped
container.
into. There's only one in Houston, I know of. That's right there in Third Ward.
Oh.
Yeah. And the owner of that home, he is, man.
I'm trying to stand up. I'm warm, but I'm always warm, so. I'm happy to be here.
Like, I thought it was.
I'm good today.
There's nothing going on here.
Absolutely.
I'm 48, I was like, I know something wrong. I done it 3 times, like, you want to.
Absolutely.
Oh, my goodness. But you have your cards already?
Yeah. I mean, it has my number. And it has, like I said, the forward address. You don't have my card?
No, I don't.
No.
I think I left mine.
Jennifer,
in the car, but I'm
Jennifer,
gonna
this is
make
the
sure
whole
to check it.
movement that was at.
Oh, I see.
So we actually have a few of us are with Brooks and Davis, and then we have a few future Brooks and Davis. So thank you again.
And if you guys may I please have also your cards?
Yes, and I think I left all of mine in the car. I mean, it's sad part, but I'll make y'all get them back up here. Only have my digital form with me right here.
Thank you.
Well, I got these from Boots and Davis.
Oh, actually, I have one.
Thank you.
My husband is on course too. He does all my marketing. He does websites every day.
Okay, so
My part is.
This is-
Because he did have one, but.
Cleveland, Texas, okay.
huh? Yeah. That's Montgomery County. This is the proposal, basically that she did and how we got financing for her to actually do the project, right? So she's gonna build before December 3 showrooms. And those showrooms, that land in Cleveland has about 50 lots that are already plotted. So ones that she's working right now on getting the manufacturing plant. She has purchased it. She's waiting to close on that so then she can build it in. I'm trying to get her a bridge loan so she doesn't have to wait for her to close. But if she, we can't not successful in that because I am having a little bit of a problem because of the amount that she needs. It's going to, then she's gonna have to wait, and that's gonna be, November, December, she'll start ready to go.
So infrastructure hadn't been done yet, is what you're saying?
Correct. So we have to remember, these homes can be done in 60 days.
Yeah.
There's already 50 lots that are vacant. So when they submit, the plans are already done. She has 12 models. So on the ones that are already cleaned out, ready to build, she will submit the proposal to the city. It takes about a week. Once she has that, she can start building. You'll have it there in 30 days. So
Is
it's,
it only in Cleveland right now?
yes,
She owns the land already.
that is that project. Actually, this was a JV that she did. And that's the other side of the business that I want to talk to you about. So let me skip here. So this is basically her project on the 1,000 homes. So we can tell the lender how many, what money was she looking at and what she was going to do. These are the models. Okay, these are the spec homes. So this is a 3-2, 1,600 homes, 1,600 square foot. The Trinity, which is 1,280. The Olga model, which is 2 stories.
What material?
So these are containers. These are regular windows. They're just cut the container up. This,
It looks like stucco on the right, yeah.
it's stucco. And the doors are made out, everything is eco-friendly. So the cabinets and the doors are made of PVC. They look like regular wood unless you want to upgrade and change them, but that's what they come with.
And these qualify for regular finance, conventional FHA and anything.
And how much are they doing?
This model, it's $199, I believe. The prices are coming. I'll show you here. This is where the location is going to be. So she's getting, available federal economic assistance from the city. She already has 12 models that are approved, and she already done the architectural work and all that stuff. So developer incentives is there's people already have plotted lots. So those people approach her, and that you can do that with any client that you have, people that have lots, pieces of land. So they JV, and who pays for the soft cost is what determines the percentage of the JV. It's never 100%. Either you have to get a bridge loan to plot the loans, or you have the cash and you do that, or you give her $5,000 per lot, and then she'll do the rest. Okay.
It's not bad. This, in fact, it's
So this particular community that she's developing, this is basically what it looks like. The lots that are already plotted. There are over 5 major buildings already within that community. And these are the builders that are there. The showrooms are going to be done in a separate site, but it's because she wants everybody to go there. She's not gonna be building in the actual location. She's not gonna be building those. She's just gonna have one site. Everybody comes there and see it. If you like it, they'll go ahead and they'll build it, and then they'll ship it there.
And when is this project, you can say November?
Let's say December. Let's say January. Yeah, let's say January. If it's before, you guys will be the first one to know, because, press and everything, we're gonna do a big stink out of it. So what benefit is this, right? So I remember going to a builder's meeting, and then all they were doing was complaining about, shortage of materials, not enough homes, builder are raping the clients, blah, blah, blah. And I go, okay, so what are we gonna do about it? What are we going to do about it? Like, why? Because I from being out of country, and traveling, I experienced a lot, and there's a lot of other systems that can be implemented, and they're cost effective, they're cheaper than this. Well, like what? And I go, like, container homes. So she goes, will you like a mobile home next to your mansion? I go, like, have you seen the mansions that I have? So to me, it's ignorance, and that you're gonna get with a few people. Okay, everywhere I go, I talk about the project, and people are like, what containers? Well, I don't know. You know, I don't know. I'm a stick kind of guy. Okay. So sometimes you can, what I say is I cannot change stupidity. You have a set of mind, that's you. But when I'm a person of point, I'm a person, I'm objective. If you give me the pros and cons, I'm gonna make my list. And when I did that, I'm gonna go with the container homes. Especially being from Florida, I've seen disasters. I was there when I first got here, it was 1992 in July. In September, we have the biggest hurricane ever that wiped out a whole bunch of, and that from there, we had new laws. So I've seen disaster. So, and cost effective, your insurance, your light bill is going to be 50% of your regular stick home, so,
'Cause your
and
house
it-
can't really burn down.
right? Is it gonna take termites? Oh, okay,
So what's the cons?
you tell me.
You ain't saying no.
I don't find any.
Yeah.
What
How do they
can be the,
compare to
cons?
the mobile homes? Because people are just as ignorant about the mobile homes and they are nice.
Your mobile home on a flood, on a car comes, a fire is gonna go, poof, go. The containers are Cat 6. They have 15 to 20 years of warranty, where your regular home doesn't.
I build homes and,
You tell me then.
yeah, well, no, I wasn't trying to tell you anything. I'm trying to learn. The cost on these, from a builder standpoint, are quite a bit less than most likely what wood is, right? Because the construction wood takes a whole lot less. Okay.
Is it on some slack?
It's on the last slab, it's removable, but it's stuck. So let's say it's good, what I call here, well, you guys have hurricanes, right? We have hurricanes,
Yes.
okay, but not as often as Florida. So hurricanes, you don't have to worry your house is gonna stand, your neighbors may fly out. You know, we had what was it, a snow fell and the roof caved in, on a whole bunch of people, not gonna have a problem with that. If it floods, you can get a crane and patch your stuff up.
Foundation.
Yeah.
So, you know, like I said, if I see the cons and the pros, I'm telling you, if I knew before I started building my house, if I would have known about this product before, I would have done that.
Are they gonna do any expanding outside of? Yeah.
Yes, so that's the other risk.
Is that the build on your own lot? That thing, or?
So as realtors, this is something, a project that you guys can come, sell houses, you know what I'm saying? As a investment opportunity. So if you have a client that has a lot or lots or big lots, like I said, you can partner up with her and do the JV, everybody wins, right? And she will help determining how many homes, blah, blah, blah. Well, the point is you skip, your soft costs are gonna be so much cheaper because you skip that engineer, she already has it. Unless you wanna go and say, okay, I want this house that is not there, and then that's a different story. But she does custom homes as well. Right, so it's, you know, you're skipping a step, a expensive step, a time-consuming step. So these are the public schools, private schools that are around the area. Right, so she's giving you information about the shopping plaza and all that stuff. These are the current comparables, right, that currently are on her model versus what's already there, brick and mortar.
Is she paying 3%? Which is probably most important. to us.
No, she's not. She's paying, it's total of 5 on because they're affordable housing.
Hey, shut up.
I wanna do it.
Only we to assume correctly, they could even build a house like that,
Yeah, the
like
college.
especially where it's not a HOA, you can put them up anywhere.
That's all that.
So like, yeah, I got someone who's a bit far out.
So see the Trinity model, 189. This one's selling for 205. This one's a little bit smaller. But I like this one better, eh? I mean, you can really make them nice. Look at the costumes. You can build up to 5 floors.
What kind of roof? Like what material?
It's well, so what they do is they put, they put something on top of it, but you can dress it. If you want tiles, you can dress it, or you can do the, so it's just, you have to reinforce the top because it's a flat roof. I mean, what's gonna happen to it? It's gonna get rusted. If you leave metal on water, how many years is gonna, you're not near salt water, which is gonna destroy it. You know what I'm saying? So that you put it to, this is why the longevity of it is.
They don't put like shingles in that on top of it.
You can. You
That's
can.
good.
I've seen it where what they do is you have your home and then they do like a balcony on the top and they do it out open space.
Rooftop
Item.
terrace?
Uh-huh.
So you say iron, so iron is it?
Steel.
Right.
So when they dress the top, is it like some type of rubber or
Mm-hmm.
something? Okay, okay.
They're getting that finance.
FHA conventional.
Finance, so.
So part of the business is, well, you can bring your clients, right? And if you have a client that has 2 acres, now, well, you help them put that deal together, you should darn be, and you claim that, the listing agent for all those properties, right? So you created yourself, creating opportunities for yourself. She's also now, because she's growing very fast, she has about 10 cities that she's wants to find partners so they can become a franchise. There's a cost to the franchise plus a percentage on every sale. But what that does is it gives you the ability to now build for $70 a square foot.
Jesus Christ. I'll tell you right now.
So like I took Florida. Florida's my baby. That's an excuse to be in the beach, that's all. So I took Florida, Louisiana is available.
You gonna text yourself?
She's in Texas. I don't, because she's here, but I'm telling you, she's a mom of 4 and when I first saw her, I was like, why are you not franchising this? And then our next one position, I decided to franchise.
So what all cities, Florida? Well, these are states. You got the whole state of Florida.
Yeah, so it's not the piece, it's the actual state that you'll get the rights to.
Okay.
Let me see.
So Florida.
North Carolina, Florida, California, Colorado, North Carolina, Louisiana. I know, right?
It's all free for- It's all free for-
And understand that this is duplicable in every state. If you have a client that, or you have family land, this is duplicable in any state. We just have to make the disclosures and
Yeah. So speaking of duplicable, my mind went to duplex. I understand what you mean.
you could do duplex.
Right, I'm thinking duplexes and now fourplexes being up to single family homes. Can you do those? Jesus.
Money, let's make some money. This is what I'm saying, when you have a partner, I mean, you guys are out there in the street all the time, looking at properties. And sometimes when you have, not a year, but with a finance partner, you guys have ideas. I drive, I wish that's a damn good idea. If I have this, well, why not? You actually can. It's just putting, and sometimes people, I'd rather make 50% of $10 than 0, right? So sometimes we're afraid to make partnerships or because we're not gonna get the whole thing. Do it, just make sure somebody that you like, but people sometimes get greedy and I'm not that way. You can never do things by yourself. Look, when she approached me and I go like, how are you planning to do this? Because you're a builder, but you have failed totally to see the other picture. Who's gonna sell it? Who's gonna market it? I'm telling you, that's why she calls me and I go like, I'm gonna start charging you for advice. But it's just part, listen, she has a good product. She's not paying me to do this, but she has a good thing coming. I'm a sucker for helping people. I'm, my husband says, you gotta get your money too. Because he's all about that check. But I think as a team, people can do so much more. And so, I've gone, sometimes people in Bunkie, only 20% down. Lender can only get me 20. It's only 20% down. 20% is $100,000. Man, how many people in your family go to vacation? Dude, this is a fact. You go out and you go to your network, present what you have, put it in paper. When it's not a good idea, I've known to go to attorneys when the market crashed and I was entitled. I had the title. I went close it one by one. I'm like, what the hell am I gonna do now? And I went to an attorney, a friend of mine. Listen, I don't have a pot to piss in, but this is my plan. Let's do it. If you have, and you sit down and you look at the cons and pros, it's only not everything good, but look at things prospectively, put it on paper, and somebody will buy your idea. That's right. Any questions, guys? I'm available. Really, I'm available all the time. Because I work on the phones. So we are very, how do you call it, savvy, techie. So I try to, So I try to, have people complete their application and submit documents in the portal as much as they can, because that helps me be in other places at the same time. I do have help. He's in Florida, but he's still licensed here in Texas.
Do you prefer email, text?
Girl, everything. So if you don't, I usually answer my phone. If I don't, it's because something's going around me that I can't. I honestly can't. But if you text me, leave me a message, email me, I respond to you. And I don't take a week to respond. Give me less than 24 hours. I'm really good about that. Because I hate to be ignored. And like I said, when I want things, I want it done now. Because in this business, you have to be fast. If you snooze, you lose.
Now for the container home, I know that.
Did I stop it? Did I? Okay, I'm fine, okay.
You can use the traditional financing option. When I heard 20% now, for these particular homes, you have to put it down more for the container home? Or is this whatever criteria would be just for any other product? Okay.
You can buy it as an investment because she's not capping it to, just primary residence. So she's saying, if you want to invest here, come. And also that's another part of the business, doing the franchise, right? So you have, you can, as a realtor, you can come in and do that. I gave you the option of, if you have clients with JV, that you can JV with, you have the option of the franchise. And you also have, if you have monies under the mattress, you can give it to her and invest, because she's what's the word I'm looking for? It's on Spanish. Hold on. She's raising money. So for every, I believe, minimum investment is 10,000, and within the quarter you get 25% of your investment. So which is also, pretty good deal. Because what she does is, the lending that she has to build wants her to have the lot. So what she's doing is, if somebody comes with $10,000, that's a lot she can do. When that's cleaned up, she can pay you right away with a 25% interest, because she's going to start building. She's going to get funding from that lender. Capiche? Okay, so I got to go to my kitties.
Can I sit in the appointment with you?
Huh?
Can I sit in the appointment with you?
Of course.
No,
No, you may not.
No. I need to do
How
it all
dare
right.
you?
What's your
We got a
schedule look
question
like?
up there from Laura. Did you already address that one? Can an IT buy? Okay, cool. All right, I'll-
Cancel.
Sure. What's your schedule look like tomorrow?
Let me see. Tomorrow is what, Friday?
Friday. Supposed to be Dallas, but okay.
All right, well, I want to thank everybody for
That's
attending
what I was saying,
online.
but I'm thinking that I have
It's been a
something.
great training. We thank you for attending, and we will see you at the next training. You all take care and have a great rest of your day.